Let's talk about the results that we saw coming through yesterday. We had those two banks, Wema Bank, releasing results, profitable, but still ending the session lower. Is there any reason why the market is marking those two down, given the fact that they are rebounding from a loss the previous year into profitability this year?
Yeah, generally, I think it's still all about sentiment. Confidence is still a bit fragile in the market at the moment. So despite the fact that we've started to see Q3 results trickle in, I think it's just a matter of time. The trend has to be clear that a lot of these banks are actually on the right track. And I think what you've seen, the market has performed very, very strongly from the beginning of the fourth quarter. And then what you've just seen is that people want to take advantage and take profit and lock that in before the cycle reverses. Now we've seen 3 days session of straight losses. We expect that the market will start to stabilize again, and then people will start to make rational decisions with regards to coming into the market.
Yeah, yeah, go on.
No, but I mean, with regards to, Wema Bank, most investors see Wema Bank as in a slightly precarious position. So people need a bit more, need to see a lot more for investors' confidence to be boosted. But I think they're probably on the right track. We expect that they will make it in the end, but I mean, time will tell.
In terms of the results that we saw yesterday coming from the two banks, were those in line with your expectations?
I guess for now, when it comes to banks, a lot of people's expectations are tempered. What we're expecting is recovery, and we're seeing that. And especially from where they were last year, definitely everybody expects an improvement. That was supposed to be, I mean, as bad as it gets. Our expectation generally, I mean, Wema Bank doesn't, because of, I mean, their own precarious position, people want to see a trend, and I guess you'll be watching them closely quarter on quarter, and to see whether they actually get out of the woods. The second bank I think you're referring to is UBA.
UBA, indeed. Yes, that's correct.
Well, UBA is in line with expectation. We expect to see a bit more in terms of the profit numbers, just because of the size of the balance sheet of the bank, and people think, you know, they can't sweat that assets a bit more. But as it is, they've been very cautious about, you know, growing their loan books. But generally speaking, we expect that, I mean, from the next quarter, we'll start to see, I mean, much stronger results.
Yeah.
But generally, for the banks, people are still cautious.
Indeed. Now, yesterday we also had news that the International Finance Corporation was taking up a stake in Guaranty Trust Bank. I haven't gotten any indication of the size of the stake here, but what's your view on the IFC coming into Guaranty Trust Bank? And also, second question to that would be, does that rule out a possibility of a takeover of Guaranty Trust Bank?
Well, first of all, I think it's a vote of confidence. Guaranty Trust Bank is one of the most disciplined bank in the system, highly profitable. I think the size of the stake is somewhere around $200 million from the information we have, which 170 million is supposed to be debt, and then about 30 million supposed to be equity. From the information we gather, we're still hoping to see a bit more information, but I think it's a massive vote of confidence in Guaranty Trust Bank, and I'm sure the capital, will help bolster their on-lending activity, because we expect that the debts should be reasonably priced and should be very comfortable from GT points of view.
And does that rule out the takeover by somebody else? Does that make them safe, if you like, on their own as a standalone unit?
I think a takeover is unlikely for GT. The market does not expect a takeover. GT is one of the biggest banks in the country, and I think, you know, they're in a position, I think their shareholders are in a position to resist any attempt, because they are actually in a very strong position. Return on equity is good, return on assets is decent, and it's one of the most profitable banks, and probably one of in the strongest position from the difficult periods we've seen. So that is, from our point of view, you know, it's unlikely, but it is possible. But we've not seen any indication that there's a takeover at all in place.
Indeed, this is a story that the rest of Africa is watching with very keen interest. Let's talk about the coming gorilla, if you like. Dangote Cement listing on the exchange on Tuesday, 135 naira rand, naira tag on its pricing. Is that expensive?
Well, you know, expensive is relative, and different people will do different valuations. I think the key thing is the assumptions you've made into, you know, imputing into your valuations. But the idea is that, and the expectations that you expect. We think that, first of all, it's a very, very difficult issue to ignore because it's going to be a quarter of the market. And generally speaking, we've seen Dangote streamline its business. We've seen it, you know, move from strength to strength. And we think based on the commitment they say they want to, the things they want to do, we believe 135, it's reasonable. It's reasonable, I mean, I would say. But I would like to also see sentiments after that listen. What I will do, I mean, if I were an investor, is that
sure,
I would still take a piece of, I mean, the action at this point in time, because you're never really sure, I mean, what happens afterwards.
Absolutely. I think it's interesting because we just had someone from African Alliance, in fact it was Claire Tyrrell from African Alliance, and she was talking about some of the issues that Dangote Cement is coming up with, and also their expansion plans across Africa, and the valuation on that stock seems positive, but yeah, the general sentiment seems to be perhaps it's been priced extremely aggressively. But let's talk about the rest of the market and the kind of pressures that we've seen this week. In your book, are we beginning to see a market that is reflective of the fundamentals and also the expected earnings uptick in the third quarter?
In my book, not just yet. And I think, I mean, for our market, it's still more about sentiments. I think the market is, I mean, bridging the gap slowly. But what we see is a lot of volatility. People are, we see some investors impatient and use every rally to take to bank profits just because the confidence is not there just yet. So we think the confidence is building up. The regulators are doing a lot to ensure that, you know, investor confidence return. But for long-term investors, there's still value, and I think, you know, this is the time to be positioning for the value. What we've seen is that a lot of the blue chip companies are still very strong. Their balance sheets are strong. The dividend payout is still very reasonable. So what our own opinion is that, you know, if you're a long-term investor and you have the staying power, there's value in the market.
But for now, if you are nervous about where earnings are likely to be, stay on the sidelines.
If you are nervous, you're not a long-term investor. I think by the first, second quarter, generally speaking, the market would, should be more stable, barring, I mean, you know, the election, what happens regarding elections. But we expect that we'll get over that quickly, because I think by the time the Electoral Commission comes up with their timetable, whether it's January or February that they hold the primaries. But once you get that sort of thing over the place, I think generally in terms of macroeconomy, the government is trying, you know, is saying the right things, one, and they're putting things in place and a framework to try to address some of the fundamental issues that we have in the economy.